Are you noticing very strange activity going on in the silver market and gold market? This morning, gold alone, I looked, down 15, up 15, down 15. To me, that could be a sign of a big move to come. Will it be to the upside? Will it be to the downside? We're going to look at all the facts, you and I, see what we think, put it together. Where do we see gold by the end of the year? Where do we see silver by the end of the year? If you watched Buddy Rumble, the Louisiana gold guru, I did an interview with him yesterday, you'd know that he has a very optimistic forecast for the silver price at the end of the year. Now, let me give you a little hint. Buddy made 2 previous forecasts over the summer, and he was dead spot on when it came to gold, so maybe he's on to something. He doesn't use fancy charts, but you probably don't like fancy charts. He doesn't have a supercomputer. He uses his head. He puts it all together, and what he's saying about silver by the end of the year is cause for celebration for us silver investors, but we don't feel like celebrating today, right? These ups and downs that we have to endure. Weren't we just at $25 silver? It feels like just a few days ago, and now we're like fighting for $23. I mean, come on, man. Anyhow, we got to talk about banks because we got more banks closing their doors, and we're going to talk about how that could relate to this electronic money CBDC revolution. But of course, because that's what we like to talk about. We are silver and gold enthusiasts. We're going to talk about how that impacts the silver and gold market. And have you heard about reverse ATMs? We're going to talk about that. I read that term last night and I was like, oh my gosh, it makes sense. And I'm going to give you an example, a real life example of what a reverse ATM is out of my very own life, and it even has to do with my mommy. And mommy might be here. She watches some of my live streams. I'm sorry, Mom. You're going to be talked about during this one. Absolutely shocking data about jobs in the United States. We're going to cover that as well. Recession. We got another guru you haven't heard of, and as the author of this article points out, this guy runs a hedge fund. He's not, everybody talks about Warren Buffett and Charlie Munger. Thank you, Craig Edmonds, for that super chat. That is awesome. And just so you guys know, Susie ran out to the store, so she's not going to be harassing me from upstairs. Actually, she's not going to hear anything that I say, so who knows what I might say about my lovely wife, Susie. Nonetheless, crazy prediction from this guy. His name's Mark Spiegel. Okay, he's a guru that you've never heard of. He's a guru that you need to listen to. Yeah, everybody, that's where I was going. Susie's been giving me trouble. She says I say too much. She says, and so I apologize for that. Of course, I pronounced the word war wrong. It's war, Putin wrong. And there was something else that I'm doing that's bugging me about her. I'm like, I feel like I should just go on these live streams and not talk. So I apologize for torturing you with my inferior communication skills, but I really am doing the best that I can. And Susie loves me. She kept saying, I'm just trying to help you. Okay. And she also says I don't complete my thoughts. So I'm going to work on that today, completing my thoughts. We always hear about Warren Buffett. We always hear about Charlie Munger. We hear about Bill Gates and Elon Musk. But guys, there are other smarter people out there, and we're going to hear what this Mark Spiegel has to say about the economy, and it'll make your toes curl. Curl those suckers right now, okay? Get them ready because they're going to be super curled. And we got crazy, scary news out of Europe. We're going to cover that as well. And of course, we'll finish things off with one more little dose of gloom and doom about the United States economy. What is going on in the silver and gold markets? Gosh, just when we thought, I mean, we are like punching bags, right? I get it. I know. But you know what? We're strong. We know in the end the thesis behind silver and gold. We're not going to forget that. But let's talk about the banks. Do you think, imagine this, and I told you about some conversations I had with my lovely neighbors over the weekend who just happened to be in the banking industry, in the financial services industry. You know, they consider it a special treat when they get to talk to me, right? Basement dwellers, people like us, because I'm always probing them. And what they were saying about the move away from cash. Do you think, Can you envision a 5-year from now, 8-year from now period where we don't have any cash anymore? I think it's coming. Okay, you may not agree with me. It may be controversial to say that, but I think sooner than we expect, we're going to be living in an environment without cash. But what does that have to do with silver and gold? We're going to get to that. Don't worry. But for right now, what we're hearing, let's put all these pieces together. Let me tell you what's going on with Wells Fargo. Bear with me here. I'm on top of the technology today. Come on. Okay. Yeah, if I had this ready, you wouldn't have to be sitting there listening to me do nothing. Okay, here we go. Wells Fargo. This is interesting. And it's not just Wells Fargo. Okay, here we go. Wells Fargo's closing branches. Blah, blah, blah. We know that. New Mexico in particular. But this says here, New Mexico isn't the only place where Wells Fargo will be scaling back its presence. Banks are closing branches, guys. The Popular Consumer Bank's most recent OCC filing, whatever that means, that impending closures will affect locations across 16 states. The Daily Mail reported. The list includes 6 branches in California. Do you live in California? 4 in Florida and Georgia. 3 each in Pennsylvania and Virginia, 2 in Colorado. This is Wells Fargo closing branches. Idaho, Maryland, New Jersey, and Texas. It also includes, so that's 2 in all those states. It also includes 1 each in Arizona, Minnesota, Nevada, Oregon, Washington, and finally, can you guess the final state? It starts with a W, Wisconsin. Interesting. Now, what does that mean? On top of other filings made in January, this means the bank will be closing more than 100 of its 4,000 branches nationwide this year. Blah, blah, blah. Then the people from Wells Fargo say, but don't worry about anything because we're opening a few branches in some other states. And, we have great digital alternatives for you. Okay, even though this is where it gets interesting. Even though Wells Fargo may be the latest to announce closures, it's far from the only major bank that shuttered branch locations recently. This spring, PNC Bank said it would be closing 30 more branches across 7 states by July. They've closed 203. And in April, Santander announced the closure of 17 branches, while JP Morgan Chase announced the shuttering of 3 branches. This, and we're going to talk about reverse ATMs. Do you know what a reverse ATM is? The trend of mothballing physical branches appears to be picking up speed as more customers move towards digital services. Data shows that from 2017 through 2021, 7,425 bank branches closed nationwide. 7,400 bank branches since 2017. Wiping out 9% of all locations. Insider Intelligence reported in March. Okay, now, this is where it gets really interesting and where we can start thinking about digital money, CBDCs, so the government can control and see everything you do with your money, because it's not just human tellers that are going away. Research also shows that ATMs are declining. According to data from Euromonitor, the overall count in the U.S., overall count of ATMs decreased from 2019, when we had 470,000 ATMs, to only 451,000. Not a crazy amount, but fewer places for you to get your cash. Now, do you know what a reverse ATM is? I thought it was in this article, but it must have been in another one that I read. The move away from cash is being emphasized by more and more reverse ATMs showing up. A reverse ATM means you take this paper money, you feed it into an ATM, and it spits out a little card, a little Visa or MasterCard with the electronic money loaded on it. We're seeing these show up in more and more locations. I was at Six Flags with my mommy and my daughters a couple weeks ago. We had to buy a ticket for my mom. It was like bring a friend for $19. Anyway, we got to the ticket booth and they said, sorry, it's bell time. That's 10 rings of the bell for each 10 thumbs up. I'm sorry, 1 ring of the bell for each 10 thumbs up. Anyway, they said, we don't take cash. And we're like, well, we don't have cash. I didn't bring any, whatever. Or we don't have any credit cards. Sorry. I didn't bring my credit cards with me. They said, oh, right over there, there's these 2 machines. They look like ATM machines, but they were reverse ATMs. You put your cash in and it spit out this little card, electronic, Visa card. So we put $25 in, it spit out a card. She brought it over and it worked. What that means, what's significant, guys, the trend away from physical cash is picking up speed, okay? Let's think about that. Banks are closing their branches, okay? We know that. Like 10% are gone since 2017. It seems to be picking up speed. Go into a Bank of America branch. This is not a family show, but I am going to talk about my mom and dad one more time. I think I brought this up yesterday. They go into Bank of America. They've been there. They're like, there's no people anymore. It's weird. It's different. Okay. Banks are closing up. Banks have fewer people. ATMs are in decline. Okay. Reverse ATMs are growing, recline, whatever you want to call it. Digital banking is exploding, okay? And now, think about this. We have the Federal Reserve that just rolled out the FEDNOW program, their electronic funds transfer that they're saying everybody's going to be using. Does it make sense? If you read, of course, we're not going to get no. Do you feel like, no, we're not going to get a CBDC? No, we're not. It sure seems like we're heading in that direction. And what does it mean in a CBDC all-electronic world for the gold and silver price? What do you think? What do you think? I think there's one version that I like and another version that I don't like. I like the version of a CBDC digital money world where we're still able to convert it into silver, gold, the precious metals. I don't like, okay, and they've done this in the United States. Roosevelt did it in 1933. I don't like an environment where we're in a CBDC controlled environment, but they have laws, right? And we have patriots fighting for us, people like Pat Holland, who was on this live stream earlier. I don't know if he still is, that are fighting to pass laws on a state-by-state basis to give you the right, to keep your right, not give it to you, keep it, reclaim it, to use silver and gold as legal tender, right? If we're in an environment where we're legally not allowed to convert silver, gold, platinum back and forth with the electronic version of money that we're likely going to see, that could be a very, maybe not great environment for the metals. But if we're able to keep our right, to use gold and silver as legal tender, to convert it, and we don't use the word buy, we use convert, into silver and gold, that could be because of this. You've heard me say this. And do you think I'm crazy when I say this? But think about it. When cash is gone, what's the only left? And we're not doing anything bad or illegal. None of us. I know you're not. I'm not. But what's our last bastion, if that's the right term, safe harbor of financial privacy? It's going to be silver and gold. I mean, I don't see many other options. Some people may say cryptocurrencies, but I'm not a crypto guy, so I'm going to leave that one all alone. If you like owning something that's nothing, but thinking it's something, that's totally up to you. I would rather go with the version of value that's been around for thousands and thousands and thousands of years. I don't know. What do you think? Do you think I'm nuts? Let me see. Anybody saying I'm nuts here? Susie's not here, so that's usually the first vote of non-confidence. I'm just joking around. Nachos, round 2. Neil from Neil Han's Dynasty. No. Oh, boy. Thank you, Sassy Silver. Thank you. Hey, guys, while we're at it, okay, don't forget, I'll put out a new piece of content every single day. For those of you who are new here, please subscribe to the channel. That helps provide some external validation that what I'm doing is helpful, and I want you to feel welcome here. We call ourselves basement dwellers, right? We pull our head out of the sand. We pop our head out of the basement from time to time to see what's really going on out there. If you want interesting information about the silver market, about the gold market, we hope you feel at home here. You hope you feel like you can make some new friends here, because we're glad you're here and we want you to come back. Please give this a thumbs up. That looks like that on your screen. That helps get the word out. Please. Please. Okay. Oh, this drove me crazy. I was watching the mainstream media news. Did you see this shocking statistic? I want to pull this up to make sure that I have this correct regarding employment numbers. I did a screenshot of it. Here it is. That's our TV here at the basement. There we go. It was kind of fading away to the other screen. August jobs report. Okay. Thank you, Sharon. Thank you, Sharon. I appreciate your vote of confidence. Guys, this is nuts. This is nuts. In August, 1.2 million U.S.-born workers lost their jobs. Thank you, Super Mario. Getting rid of this unicorn fart dust. Man, that is so nice. No, man, is this mom's basement? No, this is really my basement. Thank you, Not So Chilly Boo Boo, for the super chat. Thank you, Super Mario. Thank you, Sharon. Man, hold on a minute. I can barely keep up. Boy, if super chats came in at that rate, I'd be living on Easy Street. You guys are spoiling me. Thank you. Thank you for the donations. It does help us, enable us to continue putting out this information. In August, guys, 1.2 million U.S.-born workers lost their jobs. I thought we were living in Bidenomics, where everything was good and employment was so strong. Remember? I'll do it only once. Our president says it's working. So 1.2 million U.S.-born workers lost their jobs. This is from Fox News. But almost 700,000 foreign-born workers joined the workforce. What the heck is going on? Does that make any sense? What kind of I don't know what the word is, conundrum are we living in? 1.2 million of our fellow citizens lost their jobs, but we have foreign-born workers, 700,000 of them joined the workforce. That just blew me away. Guys, and don't forget, and we're going to get to what this fancy hedge fund manager had to say. Here's the reality, okay? The employment numbers, the employment situation being so great was like the last pillar holding up the U.S. economy. If we see 1.2 million of our fellow Americans lost their jobs in August, that we're dealing with, and this is interesting what this fancy hedge fund manager guy is going to tell us, right? But what we're dealing with is the lag effect of employment that had to do with what's called employee hoarding. Companies had such a hard time finding employees that now they're hesitant, I think those are the same words, resident to get rid of them. When that pillar starts to crack, which it is, aren't we not seeing that right now? We're starting to see cracks in the employment numbers. Sorry if I'm not talking too loud, or if I am talking too loud. Nonetheless, that's going to spell big, big issues for the U.S. economy. You know what's going to happen to the silver price, gold price, and platinum price when that last pillar really cracks, and the people, the average, the sheeple, right? The other people, the people that choose not to look at what's really going on out there, when they start to wake up and realize that this economy is barreling into a recession, what do you think's going to happen, right? That's when the overwhelming, sentiment, thesis about the economy shifts more to one that is super supportive for the silver price and the gold price. Let's go on here and talk about what this hedge fund manager had to say about the U.S. economy. And hold on. Bear with me. Yes, it's a technical difficulty break here in Ron's basement. Okay. Are we in a recession? Are we heading to a recession? We all want to know. Again, like I said, recession will be good for the metals prices. Okay. But But what did Mark Spiegel of Stanfield Capital, he released his most recent investor letter just a few days ago, 6 days ago. Here's a couple things he said. Yes, a nasty recession has been delayed due to a combination of interest rate lag effects, right? Don't forget this record level of interest rates. It's a lagging effect on the economy. It is a freight train barreling at the U.S. economy right now. Right now. Not 2 months from now, not 6 months from now, right now. Okay? We are getting ready to enter the heart of the interest rate raise storm. Okay? Also, leftover COVID cash, he calls it. I think I can say that word on YouTube, right? All that free money that people were given, that delayed the recession. And as the Wall Street Journal noted in July, labor hoarding. But the recession will soon arrive for the following reasons. Although the excess savings built up during the pandemic is still putting somewhat of a floor under consumer spending, right? People are went through all their saving. Those funds will be fully depleted by October, and consumer credit card delinquencies are now rapidly increasing while personal savings have collapsed. Hey, thank you, Sandra. Thank you. She says they're setting us up for civil unrest, and they call for military intervention and control and have us all under their thumbs. That's certainly an idea that is not out of the realm of possibilities, right? I mean, we'll talk a little more later, Sandra, about civil unrest. Thank you for the super chat, by the way. Thank you guys for the support. Also, he points out that business lending data, shipping container traffic, right? We talked about that. Shipping down 10% and inverted 2 to 10 yield curve. Bankruptcy filings. I mean, this is like the top 20 reasons why we're heading into a recession. Declining job openings and other leading indicators say that a nasty recession is imminent. Wow. The cost of servicing. Now he's going to take on the U.S. government. The cost of servicing the federal debt is soaring, as is the liquidity draining rate of its issuance, thereby making extra fiscal stimulus unaffordable. And, but wait, there's more. On October 1st, student loan repayments will finally resume. Don't forget, guys, 46% of people that have student loans are saying, sorry, I can't pay, right? I was having a hard time paying my student loans back 3 years ago. And then they let everybody stop paying for 3 years. Now these people are saying, now 3 years later, now that everything that I buy costs 25% more, fuel, food, housing, I can't afford it. Okay? Although admittedly, many debtors will undoubtedly utilize the Biden administration's 1 year. I guess there's going to be a grace period. Guys, where do we even start on this situation? I mean, I think this guy, what was his name again? Hold on. See, we don't know his name, Mark Spiegel. But the author of this article pointed out, like, most of the smartest people, the smartest hedge fund managers, the ones that really have a grasp on what's going on. We don't know their names, but I mean, I won't go through the list, but doesn't it feel like we're heading towards some very, very difficult times? And headline today, this is where it gets even just a tad bit more interesting. Headline, futures, stock market stumbles after German factory order collapse. Oh, what's the big deal about Germany? Just one of the biggest economies in the world, okay? And surging oil spark stagflation fears. Stagflation. But are you asking the same question I am? Now they're talking about stagflation. Susie says I need to finish my thought. Germany, major economy in recession. Europe. What happens in Europe matters here. What happens in Germany in particular matters throughout the whole world economy. Okay? Oil surging. Okay, right? That's highly inflationary. Okay? And then headline, stagflation fears. Are you feeling like me? Like when If you thought like, when are it's not even the sheeple, it's just the general people that follow the markets, when are they going to wake up to the fact that we are in a stagflationary environment? And guys, here's the good news. The good news. We need some good news. Stagflation is the most fertile soil for the silver price and the gold price, bar none. Okay? Hey, I need to ask you a favor. If you're here and you haven't pressed the thumbs up, please press the thumbs up. It really helps get the word out. I'm not going to go on and on, but it also makes me happy to see more thumbs up because I need more external validation. And when we get to 200 thumbs up, yes, I'll ring the cowbell. Even though some people are complaining about the cowbell, it's a part of the show, and I'll continue to do it. So please. Jerome Powell and the United States Federal Reserve and stagflation. If there's one thing, right? Remember, when Jerome talks, most recently he talked at the Jackson Hole, Wyoming, Kansas City Federal Reserve Symposium, or whatever the heck they call it. Bunch of central bankers from around the world. He's only giving us the tip of the iceberg. When the Fed talks, right? Whatever they talk about, they're not talking about what's really going on, okay? What they're talking about is what they want to feed to the sheeple, basically. They're giving sheeple food, sheeple feed. They're like, going to the farm store and buying sheep food. That's what they're disseminating. It's the tip of the iceberg. Remember this. This is critical, too. I'm going to talk about this every day for the next month. When Jerome spoke, until he says something else, I got to talk about this because it's to me, let me know if this blows your mind. When he talked, this is our head central banker, the world's most powerful, biggest economy. How did he describe the situation he's in? He said, well, I'm navigating by the stars under cloudy skies. It's bad enough he's navigating by the stars, but then he had to throw in the zinger kicker that the skies are cloudy, so he can't really see the stars. Behind closed doors, I'll tell you what they're talking about and what they are deathly afraid of at the Federal Reserve, and what is the most conducive environment that we could ever ask for as precious metals investors. Yes, it is stagflation, right? Where we have a stagnant economy. And, it's not called ragflation or recflation, recessionflation. It's called stagflation. Do you think we have a stagnant economy? Officially, they're telling us that the economy grew at 2.4%. Or 2.1, they revised it down, of course, because they always do that. They put out numbers and then they revise them down. Subsequently, 2.1%, while we're spending 1.4 trillion per year more than we're bringing in. And so the best number, the rosiest number they can put out for us is, we grew at 2.1%. The U.S. economy's strong. Look, employment's good. No, I don't know. What do you think? To me, it feels like we're in a stagnant economy. Do we have inflation? Well, guys, sure, it's come under control a little bit, but it hasn't gone away. Even by the most rosiest of predictions, we're still at 3%, 4% inflation? That's not the Shadow Stats number. Shadow Stats says something much, much higher. The real inflation rate is much higher, but here's the kicker. Here's the big kicker. Right? We like to get kicked, us basement dwellers, or we like to do the kicking. The big kicker is the fact that oil prices are exploding, and oil is the lifeblood of the world economy, period. Nothing impacts inflation more than the price of oil, and it is going up, up, up. We got 200 thumbs up. We got almost 400 people in here. Hey, don't leave. I'd like to see us get to 400. We got more to talk about. Stagflation is going to be party time for silver and gold investors. Let me ask you a question. Here, I have a question for you, all of you, right? Joining from all over the world right now. That's a fact. We're going to get to 400 people on this live stream, but more importantly, I got a question for you. Do you believe that we're in stagflation right now? Yes or no? Type that in the comments. I want to see if there's agreement on the fact that we are in a stagflationary environment. Thank you, Annie Oakley. Thank you, Neil. Thank you, Jake Custom Parts. And of course, thank you, Coin Shop Chris, guys. Yes, yes. Wes, yes. Robert Lane, yes. Stephen Hobby, yes. Yes. Yes or no? And Ken D says yes, yes. Doug Crosby, yeah, yes, 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 yes. So we feel it. We know what's going on right now. Does the general population know what's going on right now? Not yet, but that will change. Here, one more quick one for you guys. Bear with me. Bear with me. This came from Business Insider. Headline, okay? Yesterday, U.S. households are on the brink with excess savings likely to be depleted by the month end. So let's touch on this. We talked about this a little bit earlier. Savings built up by American households during the pandemic are all but gone, the San Francisco Fed said. I didn't realize this. Thank you, Ron McAdams. Yes, yes, yes. Stagflation. Good for the price of gold and silver. I didn't realize it was this profound. U.S. households savings have fallen from around $2.1 trillion in 2021 to around only $190 million. It basically went from $2 trillion to nothing as of June. Guys, what does that tell us? Think about it. What does that tell us about what's going on out there in the economy? That means people had all this extra money, right? But now, over just the last 2 years, because of the ravages of inflation, because of gas stations, because of grocery stores, because of apartment complexes, all of those needing to raise their prices so much, all that money is gone. Bye-bye. Gone. Okay. And then we know that on top of that, what people are doing is putting their daily living expenses onto their credit cards. Credit card debt, all-time high. Interest rate being paid, all-time high. Our government's debt, all-time high. Corporate debt, near all-time high. Mortgage debt, near all-time high. Are you sensing a bit of a trend? All this money, but guess what? You got to remember, somebody thinks they're going to get paid back all that money. This thing could go pop, right? Bubbles are big and beautiful. I don't know. Maybe we shouldn't talk about, maybe I need to finish, maybe we shouldn't talk about stagflation. Maybe we shouldn't talk about recession. Do you think maybe we need to consider the prospect, the possibility? Look, I'm not painting any crystal ball, but nobody talks about depression. Nobody. Are we living? Do you feel like most people feel like we're living now in a time where we could never have another depression? You kind of hear that. And I think it's kind of easy to think that. But guys, all this debt, all this funny money, all this make-believe unicorn fart dust, we haven't said that yet once during this live stream, that's out there, the system being so contorted, perverted, sensitive, right? Very sensitive to anything that happens. Could we see a pop that results in a depression? I don't know. I mean, am I going to get banned from the internet for saying that? I hope not, because if we look at history, I think throughout history, there's probably been times throughout the last several hundred years, several thousand years, where people thought, oh, it could never, but it could. It could. I'm not saying it is, right? The nice super chat brought up the prospect of civil unrest. I mean, don't we kind of ask yourself this question, right? Look at what goes on in downtown Chicago. Look what goes on in a lot of the big cities, Seattle. Look what went on in Portland. Look what went on in San Francisco. Don't we have, people just walk into the stores now, groups of teenage kids, and with big bags and mobs of them and just rob place? Don't we kind of, sort of, to a certain degree, already have the beginnings at minimum of civil unrest? I mean, I don't want to scare you. I don't want to scare myself. Susie's not here to yell at me right now. But aren't we living in a period where, when we look at it we take a step back and look what is going on, the prospect of some civil unrest doesn't seem all that far out of the question. We got the 400 thumbs up, or 400 people on the live stream. You guys are awesome. Thank you for being here. So as we look at this from a big picture perspective, a self-preservation perspective, protecting our families, protecting ourselves. Look, we got to protect ourselves all first. Our families are right there, obviously. I'm a parent. I know that feeling. We got to consider everything that's going on out there and, not be negative, not be complete doom and gloom, right? But consider different alternatives that possibly could happen in the future, okay? Here, it says here, all these Americans that have spent all their money, right? It may indicate a wider squeeze for Americans who must contend with the highest interest rates in 22 years. 22 years? U.S. households are poised to run out of excess savings, accumulated, easy for me to say, since the pandemic by as early as the end of September. The San Francisco Federal Reserve said that. Excess household savings in the U.S. have fallen every month for the last 23 months as inflation has gone up and up. In 2021, we already covered that. All right, here. Our updated estimates suggest households held less than $190 billion in aggregate excess savings in June. That's not a lot across the whole United States. There's considerable uncertainty in the outlook, but we estimate that these excess savings are likely to be depleted by the third quarter of 2023. Guys, I don't know. Does it feel like to you there's a big choo-choo train coming down the tracks at the United States economy? I tell you what, let's have some fun. If you think that we have a choo-choo train heading straight at us, please, in the comments, type choo-choo. That's CHOO, CHOO. Thank you, Neil, for being here. Craig says, I'm poor, but bills are paid. That's why I'm broke. Yeah, exactly. Robert Lane sees a choo-choo. Me and my drone sees a choo-choo. Coda sees a choo-choo. Twain. Casey. Stephen Hobby. Jim Green. Coinshop Chris sees a choo. Laffy Taffy, good to see you. Been a while. Choo-choo. Ken D. Bingo Betterdall Beaver. Choo-choo. Another one of my favorite usernames. Is Old Dirty Bastard Garage in the house? Maybe someday we'll have a show. Ron's Basement and Old Dirty Bastard Garage. That's a great one of the greatest names. Shannon Boyd. Yeah, guys. Yes, and the train wreck at the end of the line. Choo choo. Have we ever, is the United States of America? I had a fascinating hour-long conversation with a guy this morning who invests money for millionaires, okay? Accredited investors. You know what an accredited investor is? That means if you want to invest into a hedge fund or certain investment classes here in the United States, your government won't let you unless you are an accredited investor. Look, I'm not offering financial advice, anything like that. And this is the most down-to-earth guy you're going to love. Not Chili Boo Boo. This is the second round of lockdowns and will be the final nail. Yeah, I asked that question yesterday. Are we headed towards more, health crisis craziness? I hope not. I don't know, man. I hope not. But let's get back to, thank you for the super chat, my friend. Let's get back to this conversation I had with this gentleman because there's something fascinating. And I mean that. It was a new idea for me that when you learn something that's pretty obvious, but you had never thought of it yourself, okay? To be an accredited investor, you must have $1 million of liquid net worth, not including your primary residence. That's the way I understand it. Rich people, only rich people are are allowed to invest in like hedge funds and certain oil and gas lease, whatever. Okay. And that's great. That's great. It's a way for the government, again, to control us. Train brings my ding dongs. CoinShop Chris just emailed me his ding dongs. Yeah, it wouldn't be a Ron's Basement live stream without us talking about CoinShop Chris and his uncanny ability to consume over 5 ding dongs per day. Nonetheless, we were talking and I posed this question to him. I said, "Sir, I have a question for you. Is the United States on the gold standard? Are we on the gold standard right now?" I bring up that all the time. I brought it up with Andy Schechtman. I'll bring it up with you right now. I will argue that the world has never gone off the gold standard. Right? Oh, I know Nixon. You're going to say, well, Nixon took us off the gold standard in 1971. No, that was a mirage, right? They suppressed it. They suppressed gold. They suppressed, the value of precious metals during that time. But has the world really ever gone off the gold standard, the silver standard, the platinum standard, for that matter, for our good friend Neil? No. Sorry, I yelled. No. It has never gone off the standard. And he brought up, and I might just do a whole darn live stream about this because it was such an insightful moment. He brought up a great point. Now, the only period where you could argue, right? Well, let me back up. Let me finish my thought. No, guys, I got good news for you. The world, here's the little secret. The world has never gone off the gold, silver, platinum standard, because think about it. Think about it. You can still take your paper money, okay, right, and convert it for silver and gold, right? So the dollar is still measured against gold. It takes $2,000 right now, roughly $1,900, or God knows where it is with the price, but it takes $1,900 to get an ounce of gold. All the other currencies in the world, same thing, are measured against what? Gold. Yeah, they'll throw up all kinds of mirages and measure them against each other and say, oh, we don't care about gold and, blah, blah, blah. No. At the end of the day, it's still all measured against gold. Our fearless leader, our patron saint, because he's passed away, Mr. John Exter, who was an economist at the Federal Reserve, pointed out this very same. So you can make up all kinds of unicorn fart dust, stories, electronic money, cryptocurrencies, paper money, derivatives, this, that, the other, all kinds of fun stuff. But you know what? It all rests on a foundation of silver and gold. And when I was talking with this gentleman, Daniel Tinkham, it dawned on me, and he brought up that point. The argument can be made that we are still on the gold right now. I mean, to a certain degree, all those paper dollars, they are still measured against the gold that supposedly is in Fort Knox, right? Right? I mean, to me, I had now. Here's an interesting aside, because this is interesting. Everybody says this will blow your mind, because including me, right? I'm always saying Nixon took us off the gold standard in 1971. Temporarily took us off the gold standard. Well, no, BS. Based on what I just said, we're still on the. You can convert your dollars are still measured against gold, and you can actually, guys. The very interesting thing is this. If there was ever an argument that we were officially off the gold standard in this country, it was between 1933 and 1974. That's because in 1933, President Roosevelt needed to print money, so he, confiscated everybody's gold, and it was illegal for U.S. citizens from 1933 till 1974 to own gold. You couldn't convert it's an irony or a paradox or whatever. You couldn't convert your paper into physical metal from 33 to 74. It was illegal. You'd go to jail or pay a hefty fine. I think you could own 5 ounces or something like that. So that of any period where you could say we weren't on the gold standard would have been that 1933 through 1974 period. Silver and gold are still the base of all money. They are real money. I am honored, and I really am honored. I got to tell you why. Because you joined me today. This is a big, big deal, okay? I don't, do you guys think we can get to 300 thumbs up? We're going to need some more thumbs up. And you know what happens at 300 thumbs up, right, basement dwellers? Huh? It's easy. If you give me a thumbs up, we get the word out to more and more people. Cynthia Griffin! Oh, you gave it away. That's right, Cynthia. Thank you. Thank you. Thank you again, CoinShop. Chris, for being here and helping out all of the monitors. What's the word? I'm sorry. I'm getting too old. I'm losing my mind. Moderators. Moderators. Thank you. Wow. You guys are blowing me away. Check out Pimbex. Oh my gosh. This show is brought to you by Pimbex, the online bullion dealer. Look, I've worked with them. They sponsor the show. They make this possible. If you want the best selection, the best prices, and a company with a great reputation, check out Pimbex. They sell silver. They sell gold. They sell platinum. They're family owned. They pride themselves on getting bullion into people's hands at the lowest premiums, the best price for the best quality, and they're good people. So I've worked with them. I was very happy long before they sponsored the channel. Check them out for yourself. Come on, guys. We got to get to 300 thumbs up. Good one, original tent. Ron should get the nose. Oh, that was a good one, original intent. People are talking about, I don't know, big announcement that I'm going to get the Nosebell Prize. Not the Nobel Prize, but the Nosebell Prize. Thank you, Original Intent. You brought a big smile, big smile to my face. Let's get back to the content here. Bear with me. So yeah, I'm sorry. My new argument is absolutely that we are still on the gold standard. You may not agree with it, may be controversial, right? I may get some heat for it, but nonetheless, we are still on the gold standard. Just the way it is. The other thing that I talked about with Daniel this morning was 20 years. Are the next 20 years going to be the same as the last 20 years? What do you think? Guys, we can't underemphasize right now how screwed up things are in the economy with our government, both fiscally, monetarily, but also politically, right? There's just craziness going on right now, socially in this country and geopolitically. So when we look at what happened during the last 20 years, right, kind of an erosion, and now we look at where we are right now and look out at the next 20 years, it's not a pretty picture. In what we do, and I'm not offering financial advice, but what we do to protect ourselves, gold, silver, and platinum. Can we get to 300 thumbs up, guys? Come on, man, please. I'm not going to beg again, I promise. Okay? It's a big deal that we get together and talk about these things. We continue to see more and more lady stackers come into the arena. We talked about the banks. What's going to happen with CBDCs? This move away from cash, right? Think about it. If you don't have cash, what are people going to hold for value, right? People kind of think of cash. Americans are kind of brainwashed. A lot of us, that cash, $100 bill, right? If I came and gave you imagine right now if I came and gave you a stack of $100 bills, right? You'd be like, whoa, that's cool. That's physical. When that goes away, what are people going to turn to in terms of physical for holding their wealth? I think they're going to go to silver, gold, and platinum. I could be wrong, right? Again, don't make financial decisions based upon what I'm saying here. Guys, thank you for being here. We had 400 people who joined. We didn't get to the 300 thumbs up, but I'll tell you what. Oh, we got 291. Come on. Guys, look, I'll do it one last time. I will. I'm risking losing sponsorships from the zany behavior. We talk about a lot of serious stuff. Let's talk about me hitting this with my nose 3 times for 300 thumbs up. Can we do it? We're at 295. Come on, 5 more people, please. Find that button. Looks like that. 300. All right. 1, 2, 3. All right. You know, one thing that us humans need is each other. And we're all connected right now. And I'll tell you from my personal, you made me happy, right? Whoever gave those thumbs up, all of you, all 304 of you at this point, that's what we're here, is for each other and to help each other. I'll be back tomorrow. Okay, take it easy, and I'll see you soon.